Hello, guys. Good morning, and thanks for joining for this live session, which is on Nifty and Bank Nifty analysis. Since today I think Zubin is not there, I'll be doing this session. Uh, Broadly, this time around, in today's session, especially the focus will be more on Nifty and Bank Nifty analysis. The reason being that there are many interesting data points that are developing, and once you understand, what the data is saying, so that's where you will be able to manage your position based on the short term and the medium term, outlook, whatever you might have, because I believe that there might be many traders who might be seeing this, whereas there might be many positional people who might be seeing this video. So we will be able to cater both of them. And basically, the interesting part is that there is some conflict between the short term and the very very short term indicators. So that is what we will try to focus more on. And yes, by the way, sorry, for people who don't know me, I'm Jay Vora, and yes, I'll be taking this session today. So let me present my screen. So yes, I hope everyone can see my screen. So yes, see, the thing is that as Zubin has also mentioned that Nifty index, it had been falling, and when we look at the chart setup, so basically yesterday it had closed below the 20-day, and this was putting us on some thread that there can be some correction. But the whole idea over here was to see whether this channel holds or no, right? So yesterday we had closed just around the lower end of the channel, but today, due to weak global cues, and basically the Fed outcome, the Nifty index has seen a big gap down opening. Now from here on, the setup gets very interesting. Firstly, the reason being that when you see the prior low has got tested, and now over here you can see that the bands are also tightening. So whenever the band tightens, that sort of tells you that there can be some contraction of volatility that you can see. So until and unless band doesn't start expanding, on both the sides, you can expect that there can be some bit of consolidation. So you might end up seeing, sorry, something like this. That can happen where this support is held, and you can get some bit of consolidation over here. And the best case would be that the Nifty index breaks above this resistance, I mean the support line, which is now going to act as resistance. And once it sustains that, there can be some positivity that can be around. But remember one thing, that whenever the channels break on the downside, right? So you can see that this channel has broken on the downside with a gap. Okay, so in such scenarios, okay, your averages will become extremely important. So as long as your averages don't break on the upside, the chances are that there might be some pullback towards the averages, where the averages come over here, and you can again see the next leg of sell off. Okay, now the discussion over here, what we'll do today, is very very relevant from a very short term perspective, because nowadays weekly options are there on index. And when we see such kind of declines, usually there is a FOMO. Okay, अब हमें क्या करना चाहिए, whether we should be buying put right away and not wait for a bounce, or should we short it once again. Should we short it, and the Nifty might keep falling. So in such cases, honestly, the data points that we track is that, firstly, if we just purely go by the normal setup, you can see that the RMI is in sell mode, and it is sort of in an advanced stage right now, where if we get a bit of a consolidation, it can be turnaround, and maybe there can be a crossover as well, right? So the best thing would be that probably the correction which started from this high, I think there was almost this 1,000 point correction that has happened, right? And you can see on the daily chart that the bands have contracted, right? So the ideal situation would be that there can be some bounce, and that bounce is where again the selling pressure may get may kick in. So that will be, this will be the ideal scenario, right? Now when I see the sentiment indicators, okay, I somewhat get that feeling, and I'll explain you why. So, as I mentioned at the right of the session as well, that the focus would be a lot more on sentiment indicators, right? So, when we look at the sentiment indicator, so what I've done is that I have categorized the sentiment indicator based on few data points. Based on short term, very short term, and so on. Okay, so you can see that I have made this indicator. Made this template which is extreme short term setup. So when I see the extreme short term setup, this gives me a view, say from 1 day to 5 day or 6 7 days perspective. Okay, that's it. You have to understand the relevance. Okay, so it gives me an update only for 1 day to 6 days. That's it. Okay, I don't have to think beyond that when I'm looking at these indicators. So I'll explain you each indicator one by one. Okay, so when you see the many of the people might now might be aware with the swing and the daily swing. So you can see that the swing reading has gone to 15. In fact, it is inching higher a bit today. Now I'll tell you the way it works. Okay, so what we try and do is that we try to gauge what are the number of stocks where the momentum is rising or falling. So it's nothing to do with whether they are in buy mode, sell mode, or so on. Okay, what we simply try and do is that gauge whether the momentum is rising or falling. And you can see that there is this minor uptick that we have seen after the percentage of stock going to oversold zones of 12. And now this also I think might be explained by Zubin many times, or even we have explained in our post many times, that whenever you see this extreme oversold conditions, okay, you typically get a short term bottom. Okay, now this short term bottom can just be a minor pullback, and then again the index may go down. Or the chances are that if it is a bull market, then the short term bottom occurs and you end up getting a big move on the upside, like you see over here. These were all bull market corrections. Okay, so that's why whenever these two got oversold at the same time, uh, you ended up getting a good bottom, right? Now, but the only problem over here, like I mentioned to you, now see, this was the case where this was more of a bear market correction, not bear market, but a good meaningful corrective phase, right? So over here, both of them came in oversold zones, right? But after that, look what happened. It was 1 2 3 4 5 6 days of consolidation, and then after that, you again saw the decline happening. Once again, these indicator got oversold somewhere over here. That's where you got 1 2 3 4 5 6 6 7 days of consolidation, and it again pulled back. Now see, the reason why I'm highlighting this particularly is because this is important. If you're a very short term trader and you're trying to play the weekly weekly expiries, that time frame, your execution point becomes extremely important, right? And we are getting to this point where these two are getting into oversold zone. So as I mentioned earlier as well, the best case, the ideal scenario will be that if this is a pullback, right, then we end up getting a minor pullback for a couple of days, or 3 4 days or so. Like we have seen over here, this has been 6 7 days, this has been 6 7 days. So if that happens, maybe if something like this occurs, then it will be ideal. So that will help to relieve the stocks and the indices from the oversold condition, and then again give the strength for the next leg of down move, right? This is the ideal scenario. Now call minus put is one indicator which is very which we don't often talk, but it is extremely helpful. The way we calculate it is that the number of outstanding call contracts and the number of outstanding put contracts. Okay, we simply minus it, and whenever the readings of this is, I think, above so in this case, I mean, I think these are adjusted in crores. So whenever we get this reading of 50, sorry, this is 5 lakh, right? So that's where, you sort of end up telling that the shorts have become extreme, because you have to look at this from a seller's perspective, right? Because sellers are the one who we consider as the smart money, and if the call contracts are higher, that means a lot of shorting has happened in the call, okay, which means that the sentiment could be getting extreme in the very short term. And you can see that, this combination works ideally very well, where the swing, average swing, and call minus put, these three things, if it suffice, so in this case, if it goes above 5 lakh contract, then this sort of becomes your oversold condition, and from there a pullback or a minor degree bounce is possible, and maybe then after, you can fall again. But yes, that is what it shows over here. Even in this case, you can see that when this election low was made, you saw this reading at 5 lakh or so. And similarly at the tops, what happened is that, or if not top, then this is the point where the breadth starts deteriorating, because this is the point where there are a lot of more puts than calls, and you end up getting some sort of top, or weakening of the breadth over here, right? So given the current scenario, you can see that swing, average swing are in oversold. If you see call minus put, by the way, this is whatever data we have been tracking so far. This is like the record, call minus put position. I haven't seen any time this high reading. So my best guess would be that there can be some bit of consolidation, and that consolidation we need to see, whether, so say this is the consolidation, so whether we end up seeing, Nifty breaking above the averages or no. If the averages don't break, then the chances are very high that this consolidation sees a next leg of down move. Okay. So, if there are any questions that you all have related to this, maybe I can take up right now. Else, if there are none, then, we can move on. So yeah, gold, silver, sorry, we wouldn't cover in this session. Okay. But yeah, I mean, gold, silver we cannot cover in this session. Nifty I've already done so. If there is any other question that is there, yeah, so I don't see anything. So yes, I mean, see, broadly this is how it is in the Nifty index. Right now, when I look at the bank Nifty index, okay, so when I see the chart over here, it again sort of tells me the same thing. And yes, there was one more observation which I actually did not mention. So in the last 3 days, when this Nifty has been declining, okay, we are consistently seeing some sort of short build up that is happening, right? So this is where, this is a bit of a concern. So you need to see that whenever this pullback is happening, are the shorts getting covered or no? Because if it doesn't get covered, that is one more additional confirmation point for you to say that the shorts have not moved out, and this is what we need to be careful of. Now when we look at the bank Nifty index, I mean, there, you have the similar setup. 20-day was broken yesterday, 40-day was broken yesterday. Today it has fallen to the lower band. If you see the RMI cycle, it has come back to the 0 point. So yeah, I mean, you can say that there is maybe this decline could be getting over. Okay. And again, what we would expect is that there can be some bit of consolidation that you see over here. Okay. And only then we decline, if at all it has to decline. Okay. uh, Normally, if the rise from 23,200 in Nifty, whatever we saw, so basically if these are all the start of a new leg of up move on in the medium term, then ideally the averages will be broken on the upside and we could be rising higher, right? But the other bearish case is that, I mean, which is what is happening right now, because even I think in bank Nifty we ended up doing that the channel was broken down with a gap on the downside, right? So this is not so ideally, firstly, to gain some strength, it has to cover back all the gap area losses, and then the second sign of strength would be when it crosses above the above the hourly averages, right? So that is where it is. In fact, I showed you for Nifty index. For Bank Nifty, it is even worse. I mean, so last 3 days, the Bank Nifty has seen the open interest built up on the short size, and in fact yesterday was 7%. So today it is 7%, but you have to see obviously at the end of the day what happens. So yes, I mean, this is broadly it. And one more thing that I can see is that there is a bit of a gap area. So let me see if that is there in the spot chart as well. So if I see the spot chart, then yes, over here you can see gap area as well, right? So yes, I mean, apart from what we were saying about of the lower band and so on, the gap area should also come to the rescue. So as I mentioned, the ideal scenario will be some bit of pullback, and then see what the Nifty index does over the around the averages, or maybe around this gap area when it's get filled. The most unanticipated thing would be that the index keep falling, right? I mean, in which case it doesn't give a chance only to short. But as I mentioned, I mean, this looks unlikely given that the way the sentiment data points are playing out, especially the short term sentiments which have got extreme. Now, as I mentioned to you, that sometimes there can be conflict between two time frames, right? Which is your daily or your hourly is suggesting that there can be some pullback. But when you see the medium term trend, I mean, this is where it is a bit tricky. Because see, in the past what has happened is that if there is some trend that is prevailing, right, like this is an uptrend. So sorry, over here, basically these were the uptrends, right? So in the pullback, it used to come to the midline. Okay, this was basically suggesting that extreme overbought zones are corrected, or extreme optimism is corrected, and then once again it moves higher, and they start building position in the direction of the trend. Now this time it is turning out to be the other way around, where they have actually shorted. Okay, the ideal scenario will be that they end up short covering and they become excessively bullish, and that's where you end up getting these cycles, right, where up down up down up down. That is what how ideally it should be. But now this is what we need to watch out for, whether it starts falling from here. And because these are all slightly medium term indicators, okay, so yahan pe what we need to do is that we need to see the weekly chart, which is equally very interesting. Because on the weekly chart, if I remember, the Nifty index is I think at the 40-week average. So if you see the Nifty index, so this is the weekly chart, right? So I had drawn couple of trend lines over here. So you can see that one is the 40-week average, which is coinciding around 23,773. Okay, and you can see that the lower support line, which is basically if you take from these two lows, okay, the support line is somewhere around 23,600. So broadly, from the medium term perspective, now if I see 23,773 to 23,600 becomes an important support, right? I mean, if this breaks on the downside, especially on the weekly closing basis, which means, I mean, supposingly if this week is held and next week it falls below that, then this can be bad outcome as well, where maybe then you don't end up getting any major pullback. So like those 6-7 days pullback we might end up getting, but nothing beyond that, and we keep falling. So that would be a very bad outcome. And you can see some meaningful correction. So then the whole idea then comes down to what are the sectors and the stocks to look out for. So before that, I'll just pause for a minute and I'll see if there are any questions. So I can see Bollinger Band will also close some. Sorry, I did not get this question. There is a question from NIF. Yeah, Nifty shows head and shoulders patterns or in the time frame. Please explain. So actually, the head and shoulders pattern which was developing, that is sort of played out. Now, one can argue that this can be a slanting head and shoulder pattern as well. Uh, I mean, this will be awkward, but this was one head and shoulders pattern which already played out. Okay, and we saw a correction. So yeah, I mean, that is how I would look at it. So more from head and shoulders perspective, I will be focusing more on, wait, let me remove these channels. It will make the chart a little cleaner. So yes, I mean, more than that, what I'll be watching out for, that how weekly behaves, especially if I'm a positional trader, right? Or I'm bothered with what is going to happen for next 2 to 3 weeks. So sorry, next 2 to 3 months. So then, for me, the major support area will be somewhere around 23,700 to 23,600. Okay, if this is given up, then all hopes for the bullish outcome will be negated, and then the expectation will be that this low will be retested, and if that breaks, then furthermore down levels will pick up. And in that case, you might need to draw a channel something like this, and the lower end of your channel will sort of become your target area to watch out for. So yeah, I mean, that is more of it. And if there are any questions, call minus put is seller's perspective or buyers. So we consider it, see, for every buying there is a selling, right? So you will consider more from a seller's perspective in this case, because they are the smart money, right? I mean, that is what is uh, been told and been assumed in the market. So that's where this call minus put, if there is very high reading, it tells you that there is the call sellers are getting complacent and they are shorting at any decline. Similarly, when it was a bull market, right, you can see that there used to be a lot of put selling that used to happen. Okay, and this was viewed as positive because you can say that put writers are confident, and at this point of time when the trend was also rising higher, so you combine it with trend and it tells you that there was this bullish outcome. Now when you see when the prices are below averages and this is at a higher level, it tells you that there is a lot of shorting that is happening. Now what can happen is that this shorting can cool off a bit for a couple of days like you see over here, and then once some minor consolidation has happened and the sellers are out, it will again pick up. I mean, this is what will keep happening. So you will see these sort of patterns going on and on and on, if the correction has to play out. So that way, as I mentioned to you earlier, this is a very, very, very short term indicator that you need to look out for. You don't have to read beyond 3 to 5 days from this indicator. I mean, that is a strict disclaimer that I am giving you, right? So I think can you do the Elliott wave counts on the recent move? So Sanket, I mean, since this is more of strike, we would avoid doing Elliott wave counts because many people might not be used to with that. Ajay, so your thing is sorry, I did not get the context of SMA 20. Okay, SMA 20 crossed 50 SMA daily. Okay, yeah, I mean, yes, this is also, I mean, many people view it as negatively. I mean, honestly, I don't follow that much, but yes, I mean, that in textbook terms it is a negative pattern. So yes, I mean, in such scenarios, when you know that if so basically, see, the weekly says that you are sort of approaching now a crucial support, right? So what you need to do is that simply go to RRG, right, and try to find like which are the sectors that are going to do well, or they are already leading or lagging. Okay, so that will sort of help you to understand where you should be and where you shouldn't be. Okay, this you can combine it with different time frame. Like if I combine it with daily and weekly, you will be able to get some insights. But yes, I mean, daily works very well from a short term perspective, okay, like from 10 days to 15 days perspective. And you can see that the healthcare, there is this sharp up move that is there, and it is trying to get into leading. In fact, pharma is also done well. So yeah, I mean, these are the things. Uh, if you see PSC, it is lagging. Oil and gas, it was already in, I mean, on the left hand side of this 100 mark. So that means, this is underperforming. And, sectors like banking and all, which were, giving signs that they might go into leading, but they are now once again lagging. So if you see in terms of strength, I think MNC is the one, Indian Manufacturing Index, which is a thematic one, that is showing some signs of promise. There is large mid cap 250 that is there. So, in fact, mid cap select is there, mid cap 150. Small mid caps is basically, what is doing well. In fact, not even small caps. It is mainly mid caps which are doing well, and there is MNC, manufacturing, and so on. So that's how you figure out the sectors that can do well, and the sectors that is showing some worrying sign is media, energy, FMCG. In fact, FMCG is improving, but yes, you need to see the moment it starts turning around, then weakness can creep in. Uh, PSC, oil and gas. So, these are some sort of high beta names that are showing signs of weakness, and you need to be careful. So yes, I mean, that is broadly. So the main focus in this session was on Nifty and Bank Nifty, because that is telling you a story, and which you need to be careful. And once you figure that out, you might find it a little more comforting to place yourself accordingly. I'm sure Zubin has given you all enough teaching on how to pick up stocks and sectors. So that's why I thought that maybe combining with sentiments, giving you an outlook on the Nifty index on various time frames will be important and helpful. So now with this, I mean, if you'll have any questions on stocks, we can take it up. There is 5-10 minutes that we can devote to this. If there are any questions, we can take it up. Else, we'll wind up this session. Sir, all system learning videos are available. Yes, they are available. You can go over here on help section. There is all this video that we have made for you all, like whichever is important we feel that you should understand and which is unique to our feature. uh, you will get all these videos over here. Apart from that, you would know that our YouTube channel, which is strike_IC. Okay, strike_IC. Sorry. Yeah. So you can go over here. There are this live sessions that are there. Then there are a lot of actually webinars that are there. Okay. Once this live session ends, you will come to know. But there are a lot of webinars also that we have done, and you can use it. I mean, you can consume that, and I'm very sure that it will help you to understand better all those unique features that we have put on Strike. Uh, yeah, any question? Which ETF is strong? So, Deepak, again, the question comes down to which sectors that you like. That, as I mentioned to you, from RRG perspective, you can look at it, and then you can find if there are any ETF that is there for those particular thing. Uh, so yeah, I mean, that is how I think you can approach. There is one question from Animesh. I think, any chance of a bounce back in Larsen, REC, Tata Power? So let us look at those. Tata Power. So yes, I mean, if you see the medium term chart, which is the weekly chart, it is now threatening to break below the 40 week, and it was holding all above the 40 week for a while, but now it is threatening to break. So you need to be a little careful. So then, what you do is that come down to the lower time frame, and you can see that there was this bullish crossover that was given. Okay, and I assume it might have done similar to Nifty, some 50% or so. Yes, it did 50% retracement, and now got this sell crossover. uh, So yes, I mean, see, one thing that can happen is that ye lower Bollinger Band, if it doesn't expand, okay, and it is contracting, then there might be some pullback that you can see. But the process would be the same to find if the early averages are breaking or no. Now I'll tell you the importance of early averages is because when you see this Nifty index decline, right, there was barely that it crossed above the 40 hour. Each time it crossed for a day or two, I mean, in fact, an hour or two, and then it again gave up. So when something is in a strong downtrend, trailing it with the early averages works very well. And until and unless you don't get a bullish crossover on the daily time frame, okay, it is better to stay away and see what is happening in the index, whether it recovers or no. The best thing is that you can do is that wait for early averages to move higher, and then you have a bullish crossover. Then there are some hopes that it can make a comeback. So REC also, I think, has a very similar setup, I would believe. If I see the weekly chart, it is hovering around the 40 week. So be careful and see if 40 week holds or no, because you can see that since 2021 October it has been holding, and if this breaks, then it might not be a good sign. So watch out for that. And I think the other one which you mentioned was Larsen. Larsen is relatively strong right now, okay, but on the daily averages, I believe it has broken the, okay, it is at the 40 hour, I mean 40-day average. So you need to watch out for what happens over here. But typically, I think I would be now a little skeptical on this, largely because this was a major barrier, right, for the stock, which it tried to break above, okay, giving an indication to the bulls that it is willing to break out from this consolidation. But now that it is not sustaining above this breakout point, is a red flag. And if the daily daily averages are broken on the downside and it starts sustaining below that, then I would tend to think that this was a bull trap, and maybe this was a trap that was laid out by the bears, and it could not sustain the higher levels. That is what I would think of. uh, any other questions? Okay. uh, So we'll take one last question because it's already 30 minutes. So PEL, right? So Pyramid Enterprise, I think it had given a breakout. So yes, I think I had seen this chart earlier. It had given a breakout, of this consolidation, but today it has gone back below this breakout point. So this is not a good sign. See, whenever you understand one thing, that whenever the breakout happens, okay, and if that breakout has to sustain, then usually these key averages, what we have observed is that 2040 will not break. If it breaks, then that is a sign of weakness, and that can be a sign of trap as well. So you got to be careful of that. But again, over here, what can happen is that given that the bands are contracting, maybe it can find some support over here, and maybe there can be some minor pullback. But then watch out for the early averages. Until the early averages are not broken on the upside, the possibility, which is very high, is that it might give you some minor pullback, okay, and then again it will go down. So be careful of that. So yeah, I think that's all for today. I hope this gave you some insights, and maybe some clarity on the Nifty index, which many people are struggling uh, to understand. So yes, I mean, just to broadly sum it up, there are extreme short term indicators that we have discussed, that are getting into extreme oversold zones, which honestly I had not seen for a long time. So maybe some sort of pullback is expected. When the pullback occurs, if at all, basically the pullback occurs, then watch out for the early averages, because these are dynamic levels, right? So it will keep coming down. So watch out for the early averages which are there on Rohit setup, basically the 20R and the 40R. If the Nifty index breaks above the 40R, that is where you might get some sign of strength, okay, else there will be some weakness that can be expected. And the positional guys, who are concerned with 2 to 3 or 5 months of trend, watch out for those levels of 23,600 to 23,750, which is where your medium term support line and the 40-week averages. So if that is broken on the downside and the Nifty index is sustaining below that, then there can be a threat of the low of, I think, 23,200, which was made. That can be revisited, and maybe even further lower levels can come in. So yes, I mean, that is broadly the gist of it. Thank you all for joining. See you on Monday. Thank you.